Can I practice infinite banking if I don't qualify for insurance? This is a good question because infinite banking only works when using the cash value of whole life insurance. And of course, the policy needs to be designed with the special riders that accelerate the cash value growth and placed with the right company. But those are topics for another discussion. Here's another related question. I want to practice infinite banking and I want to provide a benefit for my loved one, but I don't qualify for the insurance, for life insurance, due to my health or some other reason. Are there any options for me? Aloha. I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Freethinkers Academy, a nonprofit financial literacy organization. For the past several years, I've focused on and specialized in the infinite banking concept and the tax-free cash growth warehouse finance strategy. Now, if you find this video to be helpful, please click the like button and subscribe to this channel, okay? Thank you. Now, to the question about how to practice infinite banking if you can't qualify for life insurance. Well, since life insurance or since infinite banking requires a whole life policy, if you can't qualify for insurance, it is possible that you can still own an insurance policy. It just needs to be insuring someone else who can qualify to be insured. As the owner of a life insurance policy that insures someone else, you have all the benefits of owning the policy. That is, you control the policy, the cash value, who the beneficiaries are, how frequently the premiums are paid, everything about the policy. So, who can you buy a policy on? The answer is anyone on whom you have an insurable interest. Well, what does that mean? Insurable interest is when you have an economic interest in another person's life or the continuance of a legal entity, such as a company or organization or asset. Insurable interest also exists when you have an interest in another person based on love and affection, providing that there is a blood or legal relationship involved, such as through family or marriage. So, usually any family member will be considered as a person you have insurable interest in. If a person you want to insure is an adult, they must give their consent in order for you to buy an insurance policy on them. If they are a minor, their parent or legal guardian must give their consent. Obviously, if the person you want to insure is your child, consent isn't an issue. As the definition indicates, you may have an insurable interest in a person that is not related to you. For instance, if you employ somebody, you have an economic interest and therefore an insurable interest. So as long as you have insurable interest in someone else and they consent to you buying an insurance policy on them and they qualify to be insured, you can practice infinite banking even if you don't qualify for insurance by buying a properly designed participating whole life policy on that insures the life of that other person. As the owner of the policy, you have full control of all aspects of the policy, including the use of the cash value, taking policy loans, repaying policy loans, loading the cash value with the options that are available to do that, and everything else pertaining to the policy. And it's the cash value of the policy that makes infinite banking what it is. So again, You don't have to be the insured. You just need to be the owner of a policy. Now, what if you not only want to practice infinite banking, but you want to provide financially for a loved one and you don't qualify for life insurance? Well, in that case, if possible, you would set the policy up so that the one you want to provide for will be the insured. Then you would want to build up the cash value in the policy as much as you can. Also, as you practice the infinite banking tax-free cash growth warehouse strategy, you would want to teach the strategy to your insured loved one. And then when setting up the policy as owner, you would direct that ownership of the policy will transfer to the insured upon your death. That way, when you die, your loved one, who is the insured, will become the owner of the policy and will be able to continue the policy and practice infinite banking for themselves. Or alternately, they could surrender the policy and take the cash value out of it. Either way, you will be providing for them financially. In that way, you would accomplish both your objectives, that of you being able to practice infinite banking and providing financially for your loved one when you die. But what if the loved one that you want to provide for also can't qualify for life insurance? Well, in that case, you would need to buy a policy insuring a different person, one that does qualify to be insured, and stipulate that your beneficiary, the loved one that you want to provide for, becomes the owner of the policy when you die. Still, as you practice infinite banking, you would want to teach your loved one how to use the strategy so that they would, again, have the option to maintain the policy and practice infinite banking for themselves, or surrender the policy and take the cash value from it. Now, if you have found this to be helpful, please like this video and subscribe to this channel. Also, please post your questions and comments here. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below. The link to buy my books on Amazon.com is also below. And if you'd like to book a free phone consultation with me, the link to my Calendly page is also below. And if you'd like to apply to become a client of ours, we will welcome you to do that. The link to the application is also below. We're here to help, and we look forward to helping you. So for now, aloha and mahalo for watching.